Hey guys, welcome back to another video. In this video, I will be sharing with you another simple and yet profitable trading strategy that you can use to trade any of the financial asset classes, whether it is crypto, stock, and the forex market, with any of the lower time frames like the 1-minute, 5-minute, and 15-minute charts, or the higher time frames using TradingView. With this strategy, you can grow your trading account exponentially, with insane profit even if you are a beginner trader. So this strategy works for both scalpers and swing traders. As always, please click the like button for the YouTube algorithm, subscribe and turn on the notification bell to get notified for our next videos. So without further ado, let's get started. In this video, we are going to be trading with 3 different free TradingView indicators. So go ahead to this Indicators tab, over here, and search for ideal Bollinger Bands with moving average, and click on this particular indicator. That will be our first indicator. Now, search for Mark D indicator, and add this moving average convergence divergence to the chart. And finally, search for Money Flow Index indicator, and add this one to the chart. Now that we have added all the 3 indicators, let's set up the chart. So go to the setting of the ideal Bollinger Bands indicator, and on this input section, you will change this price data to open, and this lookback option from 24 to 50. Go to the style section, and uncheck these 3 options, and click OK. Now, go to the settings of the Mark D indicator, and on this input section, you will leave everything to their default setting. Then, go to the style section and uncheck these Mark D and signal line options, and click OK. Now, go to the settings of the Money Flow Index indicator, and on this input section, you will change this length from 14 to 12. Then go to the style section, and uncheck these overbought and oversold options, and the background color. Again, increase the thickness of the money flow line, and change its color to yellow. Change the middle line to the normal line, and increase the thickness, and then click OK. Now that we are done setting up our strategy, let's go ahead and explain these indicators and the conditions for this strategy. Now, ideal Bollinger Bands with moving average is a simple indicator developed to measure the movement of price, and then to give buy and sell signals at the same time. This is the normal Bollinger Bands with the upper and lower bands. This center line is the price plot that comes with the buy and sell signals. Now, when you see these Bollinger Bands expanding, it shows a high volume of market participants, which is usually accompanied with high price spikes, either in the upwards or downwards direction. In the opposite side, when the band starts shrinking, it shows a decline in the volume of market participants, and that the price is about to reverse. In this strategy, we will be using these lower bands mostly as our stop loss, and the upper bands sometimes as our take profit. Now, let's explain the second indicator. This Mark D indicator is the normal moving average convergence divergence indicator, but for this strategy, we are not going to use the conventional method. That is why we removed the 2 moving averages. This is because we want to trade only with the histogram. This works with the sense that this histogram helps us to weigh the actual volume and momentum of the market, which then assists us to forecast the future price direction. When this red histogram starts to grow in size, and the green histogram starts shrinking, it shows that more sellers are entering the market, and that the price is about to start a downward movement. The same thing happens when this green histogram starts to increase in size, and the red histogram declines, which means that more buyers are entering the market, and that the price is about to start an upward movement. Now, let's explain the third indicator before we move to the strategy section. This indicator is the normal Money Flow Index indicator. It is similar to the RSI indicator, but it has its own overbought region at the 80 level, and the oversold at the 20 level. But in this strategy, we won't be trading with the conventional overbought and oversold conditions, which is the widely used strategy by most traders. But we're going to be using only the crossover of this center line. When you spot a buying opportunity on the chart like this, and the Money Flow Index crosses above this center line, then you will take an aggressive trade entry long. The opposite happens when you spot another selling setup, and the Money Flow Index cross below the center line. Then, you will take a short trade entry like this, and you could have exited the trade before this buy signal appeared. Now, let's show more examples of buying and selling setup with the combination of the 3 indicators. Here is an example of a buying setup, and we are trading on the GBP/USD currency pair, and in the 1-hour time frame, you can see that when the price was trending down, you got this buy signal. Notice that the red histogram was shrinking in size, and the green histogram was increasing in size consecutively, which shows weakness in the downtrend. Now, when the Money Flow Index crossed above the center line, then you will pick your tool and place a long trade like this at the close of this candle, and set your stop loss below these lower Bollinger Bands, and extend your profit target up to this level, or according to your risk to reward ratio. You can see that this would have been a great trade entry setup. Now, let's show this again, but in the opposite direction. Here is another example, and we are trading on the dollar card currency pair, and on the 30-minute time frame. But this time, we are looking for a selling opportunity. You can see that when you got this buy signal, the price spiked upwards, before this sell signal appeared, and the red histogram started forming. Notice that the money flow index had crossed below the center line. Then you will pick your tool, and place a short trade like this at the close of this candle, and set your stop loss above these upper Bollinger Band, and extend your profit target down to this level, or according to your risk to reward ratio. Now, it is always good that you enter a trade only when all these three conditions for this strategy are met. Now, please click the like button for the YouTube algorithm, subscribe, and turn on the notification bell to get notified when we upload a new video. Thanks for watching. See you in the next video.